Today, I'm going to be trying to make a short and sweet video, trying to just show you what a fair value gap is, why it's important, and pretty much, honestly, motherfucker, if you want to be successful in the market, fair value gaps are like top of the top of the top. Like, you just have to know what a fair value gap is. Like, fair value gaps, they're going to help you know where the market's going to move, where it's going to bounce, where you should take an entry. It's just an A plus thing to know in the market if you do want to become a day trader, especially in ICT. So let's not waste too much of your guys' time. Let's get right into the video. So to give a little example, say you have your body wicks and the candles, and we see that we're coming in a downtrend. But you see that there's a little gap right in between this area right here, in between these two wicks. Now, what you would want to do is you would draw a triangle right in it, and you would say this is a fair value gap, which it is. Reason for that is because the market moved so fast in this area that it actually made a gap in the market. So now the market doesn't have a choice but to come back and retrace into this zone. It can fulfill this area and it can continue its downtrend nice and smooth. So the reason fair value gaps are so important is because say you see a nice downtrend and you want to enter the position, but you don't actually have a right entry to take. Now what you would want to do is you would wait till a fair value gap can form. Once a fair value gap forms, you say, okay, I can enter here because I know that once we tap into this fair value gap, this inefficiency in the market, we are going to come down and we're going to retrace to head lower. Or maybe you want to put your stop loss. Maybe you want to do a trailing stop. Say you entered up here and now the market's coming down and made this fair value gap. We just bounced off here. We're continuing down. Now, maybe you want to put a stop loss. Not a problem. You can put a stop loss right up here because we can see that if we come back and we break this and turn this into an inversion, which if you don't know what an inversion is, I'll be making a video on that right next, then we can possibly continue to see upward momentum. So putting a stop loss up here would be very smart. And if you get stopped out, then you can possibly save a lot of money. So to show an example on the charts, we can see right here, we have a fair value gap. Why? Because we have this body close with this body close and the wicks don't overlap. So we have this gap right in between. And look what it does. We come up, we have fun in our uptrend, we come down, tapped right into the zone, and we jumped up. But this isn't that strong of a move, so I'll find an even better example. Here, an even better example. We're coming down to a downtrend. Now you say, okay, we're in a downtrend. I want to take a position. Like I want to go short. You don't know where to enter your position. Right here, we can see we have a fair value gap. What you do? Second, we come into this zone, you take a short position and you short it all the way down. And where do you put your stop loss? Right up here. Because again, if we break through this fair value gap and actually continue upwards, it would be an inversion and we continue up. But since this is a fair value gap, we want to continue down. And that's exactly what it did. So I really do hope you enjoyed this video. Nice and quick, simple. And leave a like, subscribe. Let me know in the comments what you want to see next.